Hi everyone, Brian from Variable Traders, Wednesday, January 26th. This is the midweek video, and we'll take a look at what's happened so far this week and look ahead, see what we got coming down the pipe for the rest of the week here. But it was a wild ride today with the FOMC coming out with their statement and then Fed Powell answering questions. So let's try to figure out where we might be going here for the rest of the week. Okay, before we get going here, as always, I'd like to do a quick ad for my book on Amazon, How to Swing Trade, Routines and Strategies of a Swing Trader. If you haven't checked it out, it's on Amazon. So there we go. Let's take a look at some of these charts now, see where we might be headed for the rest of the week. And as always, like to start out with the 10-year Treasurys. You can see here we're still in a well-established uptrend. All these pullbacks are just ABCD patterns at this point, making a series of higher lows, and most pundits are seeing 2 to 2.25% by end of the year. So we certainly seem to be heading that direction. So no, not really a surprise that again we're up today. And again here the TLT, this is the 20-year. When the bond price goes down, obviously the yields are going up. So all the yields heading upwards at this point. Transports, let's take a quick look at those. Again, we're in a downtrend. We did try to rally here today. It looked like we've been putting in a bottom, and early in the day it looked like we were maybe going to head back up, but again got to this sort of 15,500 level, stalled out there, and really just as Powell started talking, the markets just really started to leak off here. And so yeah, so we ended up sort of closing on a low. And this is actually a continuation of this downtrend, and we are right into an area of where you would expect to see some support, because there's been some significant resistance here until we got to this breakout level. So we've pretty much come back down and filled this gap here. So I would say we're at a critical level for the transports. It really needs to hold here, otherwise we could be heading down to the 14.5s and then even the 14,000s on the transports. The Dow again, we're down into an area where we've seen some pretty significant support in the past. We are at a pretty critical area here. So again, I'd be keeping an eye on this sort of 34,000 level, because we really do need to kind of hold that level. Otherwise, we may be in for some more selling. The SPY, again, it's pretty much the same story. We had a pretty good looking day going, and really sold off the low of the day, which that's, I guess, that's the sort of silver lining I can see in all these index charts, is at least we were well off the low of the day, but certainly below the open and well off the high of the day. Quite a huge range of trading today on all these stocks, which shows how sort of focused everybody is on the Fed right now. Same comments with the Qs. I mean, we are at a pretty significant area of support, and I think we have to go to the weeklies to look at that. So you can see here where we had resistance here, and that's where we kind of broke out from. And now we're checking back right back to this 30, 38, 39 level, checking back to that level to see if we're going to hold there. So again, pretty critical level for the Q index as well, the Qs. And the IWM, again, right back down and actually closing at a low after we had this big sell-off, bounce back sort of inside day on Tuesday, and now we're back down, and we actually are heading lower here. And again, let's look at the weekly and just see what that looks like. Again, we've got a whole lot of open air down here, let's call it that. You've got the 200-day moving average down around 170. Not a lot of support buying and selling in this area. So you can kind of see the price by volume there. There isn't a lot of volume. We're already into this area, and it gets even weaker as we fall further. So look out below for the IWM as well, unless we can kind of hold on to this 190 level. And let's just skip along here. The dollar had a really good day today. I guess if you if you like the dollar being strong. You can see how we popped up today. Just an incredible breakdown right back down to this area where you'd expect some support, and then V reversal right back up, and now we're going back up to challenge the highs here, which isn't entirely surprising because as you interest rates rise with the U.S., then the attractiveness of the dollar gets greater with the higher interest rates. So dollar strength. And the VIX. Again, I think now that we've gotten through this sort of Fed speak, we'll see what happens. I'm expecting the VIX to drop, but it may, if we do continue to get selling, it may go higher. And Bitcoin. Bitcoin has sort of found a temporary bottom here, 35,000. Seems to be an area it's kind of wanting to hold now. This 37,500 is an area where we're seeing some resistance. If we get through there, you can see there isn't a whole lot of price and volume in this area here. There's a pretty big gap here. So I think if we can manage to get through this 37,500 level, I mean it could be a pretty quick move back up to over 40,000. So something to keep an eye on there. But right now things are looking pretty weak. Stochastics might be rolling over again here. So again, unless we get over this sort of 37,500 level, I think it's still a crapshoot. So let's do a quick look at the sectors and see which ones were strong and which ones weren't so strong. Yeah, XLY, again, pretty much the same type of candle as pretty much all the charts we've been looking at. The communication side of things is like Facebook and Google. I mean, they really took a hit today. You can see here, huge engulfing candle prior day, and yeah, a lot of weakness there. Technology actually finished up on the day despite the fact it was well off the open price and well off the high of the day, but it actually did eke out a gain from yesterday. So we were up about 0.6%, despite the fact that interest rates are starting to go up. So interesting sort of dichotomy there. Transports, again, sort of similar patterns on the materials, the industrials, I should say. Energy actually really breaking out the last couple of days. A little bit of a pullback today, but I think energy, the trend is still higher. Staples kind of hanging in there, lower on the day, but right at the 200-day moving average actually. Healthcare struggling, trying to find a bottom here. Utilities, it's funny the safety trades didn't really show up as being strong. Here's the utilities was off on the day. Again, staples, utilities, typical safety trades. Here's one you probably want to keep an eye on, maybe keep some in your portfolio, is financials. Again, we finished up on the day by about 0.26%. Well off the high of the day, well off the opening price, but again, the financials will do well in a rising interest rate environment, and that's pretty much what we have right now. And again, real estate, engulfing candle, again, sort of more of a safety trade, and but again, just even the safety trades really didn't work very well today. So what do we got coming up for earnings? We had Tesla after the close today. It really wasn't. It didn't really move very much after the close. I think it's down about $10. So you know, I don't think there was any big disappointment. I think they beat on the. I think they beat on the top line and on the bottom line. But again, unless you're hitting it out of the park, the market's just going to punish you anyway. But not too much movement in Tesla overnight. So what have we got? We have Intel, Las Vegas Sands. There were a few reporting. But tomorrow morning we got MasterCard, McDonald's, Nucor Steel. That'll be maybe interesting. We've got a few airlines, Southwest, JetBlue before the open. Of course, Apple will be interesting after the close Thursday, Robinhood and Visa. And Friday we're going to see Chevron and Caterpillar, Phillips 66, a few of the oil companies. And yeah, it's going to be continue to be a bit volatile, and that's why I'm just sort of staying in cash mostly, just keeping the powder dry, and looking for some opportunities in when we get a bit of a shift in the indexes. But right now we seem to be sort of stuck at the bottom of a range here, and I'm just waiting to see which direction we are going to go from here. So That's about it, everybody. Let's take a quick look at the pre-market right now, and pre-market, woof, we're looking like a bit of a sell-off going into the open tomorrow. Dow down over 200, and the Nasdaq down 100. So yeah, not looking great right now. All the commodities are down right now, and yields are up a little bit, but yeah, not looking like it's going to be a good open. So we'll see. We'll see what happens as we open up. But yeah, keep an eye. We're at some pretty critical levels of support, and we may actually be heading lower. So we'll see what happens. We'll see everyone in the morning, 8 o'clock. Pre-market show will start, and then if you're a member, you'll be joining us at, of course, you'll be on 9:30, trading the market open. So we'll see what the market gives us tomorrow. Have a great rest of the evening, everybody. Bye for now.